Hello and welcome to the BlockSolid podcast, where we talk about the evolution of the property market, the newest technologies that enhance and revolutionize the world of real estate and real world assets as we know it, and how we, the owners, the buyers, the renters, the exchanges, the investors, and the entrepreneurs can benefit from it all. I'm Yael Tamar, CEO and co-founder of SolidBlock, pioneer startup in real estate tokenization, and I'd like to welcome Pat LaVecchia. Hi, Pat. How you doing?
Hi, Yael. It's a real pleasure being here. You know, you're an OG in this whole space, so it's a big honor to be on your podcast. So thank you for inviting me.
Thank you so much. And really excited about talking to various topics. Of course, Oasis Pro Market and this amazing ATS. Not a new kid on the block, but a little bit of a new name that maybe some of our listeners haven't heard. So I'm sure they'll be happy to learn what makes Oasis Pro Market different from what's out there and what makes it unique in terms of technology, strategy, and of course, how this is changing the landscape for real world assets and provides different types of opportunities. So shall we move ahead?
Let's go. I'm looking forward to it.
Me too. So you got a really interesting background, in fact, right? You're at the top of a blockchain company, but you have a very traditional financial capital markets background. Can you give us a few highlights from your past career?
Yeah, sure. I'm an investment banker. So I went to school. I went to Wharton Business School. So I got an MBA there. And then I jumped right into investment banking. I ran private equity placements globally at Bear Stearns, which is now JP Morgan, as well as at Credit Suisse, which today is making a lot of news. When I was there, it was very strong. But, I was in Switzerland a lot. Globally, we placed a lot. And I was running groups of about 25 people and very successful. I then had the opportunity to run capital markets for another US-based firm called First Horizon, known as a commercial and mortgage bank, and was involved in a number of issuances there as well. And then in 2008, I had the opportunity to basically take a step back and establish my own merchant bank, which consisted of a broker-dealer as well as an investment arm, and did that for a number of years. And it got me up to crypto. And we could talk a bit about, how I got into this entire blockchain and crypto space.
Would love that. But just a quick comment on the names that you said. Most of the institutions you mentioned have been involved in tokenization or tokenized assets. Even I remember First Horizon had a token of some sort, right? So everybody kind of dabbled in, right? So it seems like bigger issuers are on that path, aren't they?
Yeah, absolutely. I mean, you know this as well as I do, but when we really got started with all this about 3 years ago, we were in stealth mode for about a year. So we would speak to large institutions, not really many others out there, because we were building, getting approvals, et cetera. And then once we kind of came out and introduced ourselves through a press release, we reached out to a number of the ecosystem players, which were very quickly, got engaged with, to grow the ecosystem. And we reached out to the institutions as well. And those conversations were fine, but, the responses were typically come back to us in 6 months. Come back to us in 9 months. This isn't on our roadmap currently, but it will be sometime in the future. Fast forward, I would say this year, especially 2022, that those discussions have gotten to the point of, let's have a call at the end of the month. Let's have a call, several weeks out. Let's bring in other groups. And it reminds me of, typical TradFi partnership development.
Wow. What is a typical TradFi partnership development?
Well, just in regards to if there's interest on both sides, you have a number of meetings, right? And it's cross-functional. So it's not obviously always the same people. It's a tech, it's biz dev, it's strategic, C-level or C-suite level people, all going down different paths of discussions, but on a simultaneous basis. And you either get a deal or you don't, right? So it's not guaranteed, but went from you're speaking to the tech folks and, they ask you all these questions about your tech, and then you wait another 6 months before, just because digital securities, digital assets, real world assets weren't on anyone's radar.
Yeah, because it's too new. So I'm guessing what you're saying is that in TradFi, more traditional finance, as opposed to DeFi, the decentralized finance, you have a bunch of people doing regular type of evaluation of a deal where they, crunch numbers and see what the value proposition is on both sides, and then they come together to a deal. And you're saying
That's
that
right.
like last year or in the last 2 years, you come to them and they'd say, we don't have any of these tools yet, and we can't even think about this. We don't have a mandate. And this year, they're saying, okay, come sit with us at the table, and we're going to make this deal happen.
Yeah, absolutely. And they're going through the buy versus build as well. Many of that's typical for large institutions and what makes sense. And, frankly, some institutions don't have large budgets for this yet because they're still determining what the market opportunity is. In 5 years, 10 years, this will be ubiquitous. We know that. I haven't run into any decision maker who doesn't believe that this evolution will occur. It's just a question of how long it'll take.
Got it. Wow. And so in terms of how long it will take, it's kind of up to them, isn't it? Do they have a prognosis?
Well, I think I'll give you an example. Custodians are driven by their end clients, right? So the institution, a number of custodians have announced Bitcoin and ETH from a custody standpoint. Now, the rails for reporting are identical to digital securities. The compliance is different. Some of the rules are different, but the rails are in place now. In regards to internally, they've developed those rails, but there hasn't been that push from the institutional market yet.
Right. When
that occurs, then you'll see, what I call a tidal wave occur. But right now, they're building for it. JP Morgan is doing it. Goldman Sachs is doing it as well. And they're just putting all the pieces in place for when that tidal wave occurs. But why you don't really hear about it or see, frankly, in the real world assets, tokenization market, super large deals yet, or big players come out, there's a liquidity issue. There's not a lot of volume. The reason is the institutions aren't demanding it yet.
Right.
Issuers are very interested, but not the institutions aren't pushing for it.
For sure. Well, the institutions also operate in silos. And
That's
from
right.
the clearance perspective, right, they kind of can sell things within their own ecosystem. And I don't even know if they frankly have a mandate to go and put an asset of their own onto an ATS such as Oasis Pro Market. I hope that
I hope it happens soon. We're working on it.
Yeah, you got to give them a few tools, right? Some analytics and market and data. And I know you're also working with Invenium, and they've been on the podcast as well. So hopefully.
Yeah, Invenium's great. The ecosystem is growing. Yeah, that's what we're spending our time on. We're spending our time with the large players to work with them in regards to solving their problems.
Wow.
That's the critical aspect.
It is.
And utilizing the blockchain to solve those problems. There's still this murkiness about crypto and blockchain, right? Mm-hmm. And when I got involved in this, I was guilty of it as well. I thought the two were one and the same.
How did you get there?
It took me about a year of conversations, meeting with people through my network who were already in the space, just asking a lot of questions and going to some events, not many, but some events just to meet new people and get different perspectives. Yeah. But when those two, in my mind, at least, when I separated the two, there's crypto, and that's a whole different set of risks and rewards. And there's blockchain. So, people like ourselves which have a capital markets background, as soon as I understood blockchain, what it could do from a real-time settlement standpoint, cap table management, lower costs, transparency, zero counterparty risk. From a capital market standpoint, those are all issues that are still, evident today. So that was when, I got really excited about blockchain.
I know, right? It's kind of like you got your own NASDAQ at day one.
That's right. That's right.
I love that. And so you said that you were out there solving problems that these big institutions have. Can you characterize those problems?
Well, it's a variety of items. One is counterparty risk, right? Because they have their own reporting issues. For issuers, it's very evident. Cap table management, distributions, back office, savings, in terms of if you know the wallet addresses, and KYC, ML, you don't need to keep checking on that. Where do you send the wires if it's a yield product? Now, for the institutions, what's driving this is that, they see the tech can be very advantageous. So zero counterparty risk could be very important. And when I say institutions, I'm not talking about issuers. I'm talking about the underlying investors. But the opportunity to have potability, right, with your own self-custodial wallet could be of interest to some. For others, it's utilizing the blockchain for their internal ecosystem, right, for trading amongst their different funds, et cetera. That could be advantageous as well. If everything's on the blockchain, from a reporting standpoint, the reporting is quite good internally in terms of dashboards, but with the blockchain, it's faster, right? It's real time. So they could utilize that. That could be important from a CIO standpoint. So, it's still developing. It's not there yet, but those are the problems that we're solving for. On the issuer side, though, it is just so evident. So you have private securities, you have private assets. Liquidity has always been an issue. How do you provide a market for that? And there have been many attempts and many failures at it just because of lack of information and transparency primarily. Now that there's this opportunity, and we're talking about trillions of dollars in the private market, which completely dwarfs the public markets, assuming we can move that over onto the blockchain, which we're all working toward, eventually the private market should be as liquid as the public markets, and maybe there's a melding of the two.
Yeah. In my mind, what we're going to see eventually is parties or companies, projects will go semi-public or public on the blockchain, and will be trading until a certain point where they will go public as a bundle. That's what I think is going to happen, because if you can buy a private asset and trade a private asset that in much earlier, right, than a much cheaper way and compliantly access a whole variety of companies before they're at a stage where you cannot make that much money anymore. And then, at a certain point, if you really want to put money in the long term, people used to hold Apple stock for 20, 30 years or something, so just put that in a bundle, like, S&P 500 type of token.
Yeah, absolutely. We're working on something similar to that regarding certain private market assets. There's going to be a lot of products out there, and we're all figuring it out, right? So like real estate is the low-hanging fruit. Yeah. Some will say artwork is as well. That market has been opaque for years, and having the opportunity to add transparency to it could be very interesting.
Love it.
There's a lot of, and what we're trying to do is, okay, everyone's doing it in a slightly different manner, is what's going to work. Right? Because as you said, what motivates the institutions? Yeah. And all institutions have different motivations. So finding that niche, that area, and then starting to build trigger points. You and I have chatted about this in the past. Major trigger points, hundreds of $1 million. So instead of a debt deal being on, in the TradFi world, a $300 million offering, same institutions, on the blockchain, that's a trigger point, as an example. RMBS issuers, same thing, a major RMBS issuer. And we're working on a variety of these different types of opportunities right now.
Absolutely. That's just so fascinating. And in general, taking the power from, let's say, a few institutions or a few exchanges and creating more opportunities in the industry. Anybody can be an issuer, almost anybody can have their own NASDAQ. And at the end of the day, it comes back to the institutions, because they can basically have an evolution and earn money in a different way, right? They have to anyway, they have to innovate. So
it's interesting you say that. I agree completely. So, when I first got involved in this, most of the discussions were disintermediate Wall Street and remove the middleman and all those components. And, right. I'm a Wall Street guy. So I'm a bit biased, honestly, but I have never seen a product come that disintermediated Wall Street. Wall Street always figures out a way to intermediate almost everything. Sure. So, I remember ETFs. ETFs were going to kill the investment world, right? In terms of independent. And when they came out, it was very slow until like iShares took off in the late 2000s. And I believe now it's probably, the numbers changed, 60 to 70 some odd % of all trading is through ETFs. Wall Street's still right in the middle of it. And ETFs went from passive to active. So, I mean, what's old is new again. And that's what I've always noticed on Wall Street. So Wall Street, we want to work with Wall Street, right? Once Wall Street embraces this, that it'll grow exponentially. They have the distribution, they have origination, they have the assets, right? To really allow this. And once they buy in, this whole ecosystem will grow very quickly.
You got to use existing rails, like you said. You got to use existing infrastructure. You cannot change everything, iPhone didn't create new towers initially, right? Now you're obviously have additional technologies coming in, creating satellites in space, right? That will power our phones, or maybe even like in the Silicon Valley, have refrigerators connect to each other. But, that's why you have that's the beauty of innovation. Then you have like these existing networks coming together, but you don't change the whole thing, right? Overnight.
Yeah, absolutely. And the other component is, you're absolutely right. So that goes to this argument, right? That, when I got involved in this, and what we did with Oasis was very regulatory forward, compliance forward, because we believed that, a lot of what was out there, even, not necessarily utility tokens, but too many companies or token issuers are claiming they're utility tokens. And, again, from my background, a lot of these look like securities. And we were, our view was, let's go down this path. Now, what's happened? And this goes, again, back to, I'm old. So I've been on Wall Street a long time. And there were arguments from friends of mine, many friends of mine in different groups, lawyers, et cetera, that the SEC was going to take an SEC light approach to crypto, STOs, et cetera. And that's fine. But, my view was, I've never seen that happen. I've never seen the regulators take a light approach here in the US. And the US and the other regulators in Europe and Asia to a lesser extent, but certainly Europe, work very closely together, right? So look at what's happened, at least here in the US. It's regulation by enforcement, but we're starting to see more and more actions being taken. Money's been invested in the SEC specifically for this. And because of the legislature here, Congress in the US, I'm not quite sure there's going to be more guidance beyond regulation by enforcement, but we embraced it. So going back to the Wall Street discussion, we embraced it. It's not that regulation, we want to be regulated in every aspect of what we do. Nobody wants that, right? But we embraced it because what it does is it allows the system to work and, frankly, to grow. With all this confusion, there's been a lot of stall in this market, I believe, where I thought real world assets, I thought we were late when I got involved about 3 years ago. And I thought we were late. I thought there was going to be a guidance. And by the time we came to market, that, we'd be well beyond it, behind everyone else. Well, frankly, we believe we're ahead of everyone else in terms of how we've approached this. And we're the only ATS today that's approved for digital cash here in the US for digital securities. We can do atomic swaps. No one else can do that as far as we know. And we're working with custodians that can do that with us. And those custodians have told us nobody else is doing it with them, right? And, it's really interesting to see that, where I thought we were behind the curve and it looks like we may be ahead of the curve.
Yeah, we certainly are. I think this is the right time, but because you already have all of the compliance set up, you're definitely ahead of the curve. So that's really awesome in the background, of course. But let's talk about Oasis in general. Let's tell the audience what you stand for and what does the company do and what's the vision?
Sure. So Oasis, our holding company, we view it, as a fintech and blockchain firm globally. And we have several divisions, but I'll focus on Oasis Pro today. Oasis Pro is a US regulated broker dealer. And we have what's called a digital ATS. So for digital tokens and securities, we actually can also put TradFi securities on our ATS. We choose not to, but we could do that as well. We're registered for digital cash, which is stablecoins, all stablecoins, CBDCs, Bitcoin and ETH for digital securities. So working with you, in regards to one of your issuers, someone could actually purchase it through the marketplace, which is our primary listing venue, with Bitcoin, as long as the issuer is accepting it. And it can all be done through wallets. In regards to trading, very similar to that. We have makers and takers. And if you'd like to use fiat, you can do that as well. But it's really exciting. But with that, the settlement times are not atomic. It's not instantaneous. But with digital cash, let's say you have USDC or DAI, and I own XYZ security, I can instantaneously purchase it from you, or vice versa.
Yeah.
The cap table's updated immediately, and you have the opportunity. There's no counterparty risk. So it's really exciting. And we have an order book. So you can see the depth of the order book in regards to the bids, asks as well. And we're a full service investment bank. So we can do, in regards to our primary and our ATS, all different types of equities, over-the-counter equities as well, not public, not nationally market listed, but all private and over-the-counter. We can, like ADRs, most ADRs, we can do all debt, securitizations, we can do RMBS, all different types of structured products. We can do SEC registered funds, private funds, et cetera. So we have a broad swath there of different securities that we can trade on the ATS and also raise capital for. We could do everything from Reg CF all the way to 144, 144A here in the US, Reg S, which is offshore. So we have the gamut of all those different types of securities offerings as well. And then we also have a full service investment bank. So what does that mean? We can do full underwritings, which is not easy we believe we're one of the few blockchain companies that actually have that. We can do fairness opinions, M&A, capital raise, both traditional and digital. So, yeah, and that's my background, right? Because for us, it's all about cross-fertilization. Rather than just be an ATS, it's about everything else you could do together to grow with your partners and the issuers.
Yeah, the ETS is just basically an infrastructure, right? That you can do things. And before the podcast, we chatted a little bit about how you guys also are working with developers and companies that want to develop on top of this infrastructure that you've built, right? All these services that you have described that they can tap into, right? Like for a startup, being able to come and actually have these tools that you've invested a lot of time, a lot of money in, and just kind of build on top. I think it's mind-boggling, right? You kind of build your own bank, build your own exchange. Everything is decentralized. There are wallets, there's bank accounts. It sounds like a no-brainer for a new industry to develop here. Is there anything here that you can predict in terms of where the industry is going to go?
We're still early days. So I was wrong 3 years ago, right? We're really early days right now. I think a lot of exciting announcements are going to come through. I think the major financial institutions, not only here in the US, but globally, are going to get more involved. In 5 to 10 years, it's going to be ubiquitous. That's my opinion.
For sure.
Over the next year or two, I think we're going to see progress, a lot of progress, and more converts, because there's still the crypto maximalists who don't really believe this and want to try to avoid it as much as possible. It's just in their core, those who help develop those companies. And I get it, right? We know Maker very well, MakerDAO. And, that started as a completely outside of the mainstream. And now it's, in a way, more mainstream firms are getting interested in it, right? But eventually, as those maximalists and others start viewing, like you had shared, all the licenses we have, our compliance, our regulatory first approach, we can work with all these companies and we can assist them through this really, this Gordian knot of a process, right? In terms of dealing with regulation, if you've never done it before and your systems aren't built for it. We've done all that build already. So like you said, it's somewhat turnkey.
Yeah, that's really cool. I love it. So tell me more about what it means to be a multi-asset ATS, right? I want to explain to the audience, generally, what is ATS? How is it different from a traditional exchange?
It's a great question. So ATS is like an exchange. It's not an exchange. It stands for Alternative Trading System. So some have described it as exchange light, but it's a completely different set of rules. And with an ATS, you can divide up subscribers. So you have to subscribe to it. Like when you're trading stocks, you're not a subscriber to the exchange. You're working through broker dealers who are subscribers or through their clearing firms. Here, if you want to actually transact, you have to be a subscriber and you have to go through KYC AML. But beyond that, the issuer can set a lot of rules, like who can invest, who can review their opportunities, who can trade. You can't do that on an exchange. It's been termed by some as exchange light because, the reporting's not as rigorous as it is for exchanges. But it is a really valid and important first step before you go, as you had mentioned earlier, let's say the IPO route or the full public route. It allows that initial step into this regulatory world. So ATSs, especially for private securities, are going to be a vital cog in Wall Street's, tool chest of opportunities. Mm-hmm. The multi-asset I touched on a bit further. So you go to NASDAQ, right? It's equities, right? For the most part. There are also other, or New York Stock Exchange or LSE, right? Now, what we do is we can have debt on our ATS. So corporate debt. We can have RMBS. We can have securities, all different types of RMBS, structured products. Securities, right? Yep. Yeah. Mm-hmm. So basically almost any asset. That's the fun part, right. It's structuring, it's whiteboarding opportunities and thinking through, what makes sense. And then we haven't really talked about this, but we really haven't touched upon crypto as much, but think about the yield enhancement opportunities with crypto that could be incorporated into securities. Yeah. And some have tried to do this, but it's really not. It hasn't taken off, but crypto has allowed for these yield enhancing opportunities within the crypto ecosystem. Mm-hmm. If you're able to apply that to the TradFi securities or moving into tokenization, that's a game changer.
Yeah. And I love how you mentioned the structured products, because I did structured products for 5 years. And I went to speak at a conference 3 years ago. It was maybe, 2.5, a day before COVID started, or, it was just the beginning. I'm sure maybe that was the 5,000 people conference that got the pandemic started in the US. But it was in Vegas. And we met with a bunch of people from banks and S&P and Morningstar and all of those. And they looked at us like we were, from Mars. What are you talking about? Right. And then 2 years later, we're getting phone calls and they're like, how do we do this? How do we build the structured products made of tokens? Because we can't sell our stuff fast enough. And like real estate REITs, we can't sell assets fast enough, but you can sell tokens instantaneous. And then they and they kind of got banks and investment banks, institutions, kind of had a mandate over structured product because of regulation, because of knowledge, because of risk analysis and counterparty risk, like you said, right? Especially because when you rebalance these indices, structured products essentially are indices or ETFs or some sort of instrument that's aggregated. And now with tools like what you guys are offering, what we're offering, you can actually essentially structure your own index and then partner with one of the regulated entities or maybe even provide compliance for them to be trading, right?
That's exactly right. And provide an order book.
An order book. Why is that important?
Well, because bid ask, right? See where the market is. Rather than blind, because right now, a lot of what you see is blind, in terms of this is what it's worth. It's like with NFTs, an example. There's no order book there, right? You either pay this price or you don't buy it, right? With an order book, you can see the depth. So if somebody is selling, at $80 or, whatever, 80 euros, whatever it may be for a particular security issuance that's tokenized and trading, let's say on an ATS, and it may be 10 shares. And, again, the other benefit is, how do I know what that underlying company is about, right? Well, on an ATS, all that information, as long as you sign the confidentiality, which is part of the subscriber agreement, and your KYC AML, you have access to all that information. And if there are issues regarding, that particular company doesn't want to have over 2,000 here in the US, there's a rule above 2,000, you need to report as if you're a public company. But below 2,000, you can build into the smart contract that I can't trade with you if that takes this company to 2001, right? So all that can be built in, and it's very, very cost effective. So it's interesting. I mean, there's just so many possibilities. And the exciting thing about DeFi and blockchain is 2 years ago, our vision's been consistent, but all these new companies that have developed and new products, et cetera, I couldn't predict. And what is very exciting is in 2 years from now, what else is coming out that we don't even see on the horizon today?
True. Yeah. I mean, kind of sometimes it's a little bit of a recycle, like NFTs are super popular. And a cool thing about the NFTs in general is that I think what people are saying unjustly, as they've been used, let's say, as vehicles of money laundering, I think eventually it will be a tool for anti-money laundering, especially for things like art. Because once you see there was one transaction for $2 million and there's nothing else, like nobody else wants to buy it, right? There's something wrong with it.
Right.
So there you go. Like the markets that are not as evident, like real estate, you have valuation that's super standard, and markets like art and other collectibles and things like that are driven absolutely by demand. I think those markets are going to be they're going to be great beneficiaries, right, of this technology and the tradability.
Yeah, absolutely. I couldn't agree more. And again, all these enhancements that we're thinking about, we'll see what happens, where it goes. But it's, there's a bit of a shakeout right now in blockchain to a lesser extent, and not really infrastructure, what we do. Infrastructure is actually the opposite, in my opinion. It's doing, I mean, we're in a very good position. But with that shakeout in crypto and DeFi.
Winter-related shakeout.
Yeah, exactly.
Or just winter, not even crypto, just eternal winter.
It's a winter.
Losses.
Yeah.
Liquidity winter. Yeah. And what about that? So what are we seeing with respect to kind of the digital security space? How is it affecting the space in general?
Well, it's bringing uncertainty. So you often hear education. I've heard that for years. It's all about education, et cetera. But you hear hacks, Terra, the fallout, with Celsius and Voyager, et cetera, it just keeps going, and BlockFi to a certain extent as well. And like where I was like about 4 years ago, where everything was melded in my mind, blockchain and crypto, I'd say 99, maybe 95% of the world still thinks that way. It's probably 99. So everything gets thrown into, the same basket, and that education and, institutions, and I'd be interested in your take on this, but when we deal with the PMs or, all different type from tech to biz dev, they all buy in to digital securities and they're interested for their own personal accounts as well as crypto. They're buying into crypto and they're buying altcoins, not necessarily just Bitcoin and ETH. But when it comes from the C-suite level, in regards to the direction of the institutions, they're not there. And there's frustration at the, I'd say tier 2 on down level because of the opportunity. But again, if you're steering the ship, you have to be cautious, right?
Yeah.
All this negative news, and it just clouds the opportunity. Yeah. But we're working hard behind the scenes. I don't know if you've seen that, but that's what we've seen.
Yeah, definitely. And I think that they have a different risk mandate, right? So PMs always have some money allocated on the side that they can just throw out. There's a certain portfolio allocation that you can just basically not use any analysis because it just doesn't exist, or any data because it just doesn't exist. But then afterwards, your basically portfolio holders are going to say, why the hell didn't you put money in Bitcoin, right? So it's a FOMO driven. But the CEOs, of course, they will forever go in history into someone who just drove the company, down into the ground. And that's where companies that, if you're buying something from IBM or JP Morgan or Microsoft or whatever, right? Then nobody can accuse you of anything. That's why I think the institutions will drive this market, or larger and more regulated companies that will drive it, right? That's a no-brainer to try it on.
Yeah,
Yeah.
absolutely. But you gave that was the perfect synopsis, which is you go with Microsoft or IBM or Goldman or Morgan Stanley not to take anybody out, right? You're not putting yourself at risk, even if it could become a disastrous investment or opportunity. Going into this space as it's still emerging, you're sticking your neck out, and not many established firms, have that type of leadership at this point in time.
Yeah, for sure. And as far as all these companies failing and disappearing, I mean, it's reminiscent of kind of the dot-com bubble that burst, and it's companies just fail. And there are a lot of IPO drama back in the day, insider trading, and the traditional financial world is not without drama, and just kind of forgot about it. And crypto is new. But if we go back in history, it happens all the time with banks. Banks fail, have security issues and money laundering and so on and so forth, right? And kind of everybody just forgot about it. So I'm here to remind them.
Well, it's here forever. And which shows you that the regulation and, the rules are not perfect, because there's still insider trading in that TradFi markets. There is still fraud in the TradFi markets. So you can't regulate for everything, right? But at least there's oversight of some type. But the .com, it's funny, on the .com, to my, what I was alluding to earlier regarding who knows where we are in 2 years in regards to product opportunities. So I remember the .com very well, right? I was at Credit Suisse during the 90s as it was really growing. And it was just really interesting. People were using the internet for email and news for the most part, like magazines, like, catalogs, a little shopping, not a lot, right? And very few people thought about what else you could do. Nobody thought about banking. Nobody thought about, providing all your private data, right? And look at what happened, right? It's really exciting. So I think the same thing, my belief, blockchain, DeFi, crypto, however you define it, we're in those early mid 90s too. I know the .com bubble burst in 2001. But I don't think that, I agree with you. That's where we are from a bubble burst standpoint. But I think in terms of the tech, we're still in the 90s. Wow.
We're still in the AOL and Yahoo, right?
That's right. Dial up.
Yeah, we still get into Facebook and iPhone of the blockchain. I love it. That's so exciting. I really love to be in the beginning, catching the wave.
It's a climb, though. Every day is a battle, right? But it's really exciting.
It is, for sure. Well, Pat, we're about to wrap up. Is there anything that we should know about Oasis Pro Markets as far as where you guys are going, what you're launching, what you're doing, and the big vision, whatever you want to share, and also where we can find you and how can somebody sign up as an issuer or a client?
Great. Well, thank you. You could go to our website, oasispromarkets.com, oasispromarkets.com. If you go to our press releases, we've been making a lot of press releases as of late. More are coming with what we consider major issuers. So a lot of news is coming. Please reach out. We've got, a year ago, we had about 4 or 5 people. We're close to 30 now.
Whoa.
And so we've got, and we're growing and we're still hiring.
You raised the round. You raised a pretty good round.
Yeah, we did a round. Yeah, we raised 27.5 plus million strategically. We went out for a lot less, and our story resonated. Our vision resonated, which is really exciting. We've brought on some TradFi folks here and DeFi. Some interesting news is we've been talking a bit about TradFi is we brought on Dick Fuld, the former chairman and CEO of Lehman Brothers, who is as TradFi as you could get, right? He ran one of the largest banks in the world for a bit of time, and he's very excited about blockchain and what we're doing. So we're excited to have him on board. And the whole idea is you're going to see us bridging TradFi to DeFi, TradFi to blockchain, and that's really our focus. So we're really excited about it, and please reach out.
Absolutely. Thanks for coming on, Pat. So cool.
Thank you, y'all. This is great. And you're terrific. We're big fans of yours. And look, we're very much looking forward to working together as well in regards to our respective companies.
Absolutely. Have an awesome day, and I'll see you soon.
Yep, looking forward to it. Thank you.
Thank you. Bye.
Bye.